Welcome to PhillipCapital's Market Watch. I am Mavis, a CFD Dealer from Phillip Securities. Today, I'll be sharing insights about the new US tariffs, with the S&P 500 down US 4 trillion from its peak and new tariff announcement creating market uncertainty. Today's episode couldn't be more timely. We will explore how the latest US tariffs are reshaping markets, examine the immediate impact on the key sectors, and discuss strategic consideration for your portfolio in this evolving landscape. Let's begin. Before we dive in, let me give you a brief overview of what a tariff is. A tariff is a tax that a government places on imported or exported goods. In most cases, it used to make imported goods more expensive than local products. This is done to protect domestic industry from foreign competitions. However, these taxes are typically passed on to consumers, raising the cost of imported products. Let's say, country A imposed a 20% tariff on imported shoes from country B. This makes the foreign shoes more expensive. So, consumers might choose to buy locally made shoes instead. Following his return to office, US President Donald Trump has renewed his tariff strategy with unprecedented intensity. Recent announcements include targeting China's steel and aluminium with double tariff to 50%, citing a US $400+ billion trade deficit with China. Trump's stated goals remain consistent: rebalancing trade relationships, protecting American manufacturing jobs, and reducing dependency on foreign supply chains. However, unlike his previous term, these tariffs are being implemented amid different economic conditions, higher inflation concerns, and a more fragile global economy. On 4 June, President Trump's double tariff on steel and aluminium imports took effect, doubling existing levies on Chinese steel and aluminium from 25% to 50%. This is part of Trump's renewed push for aggressive trade protectionism, claiming China continues to undercut US industry through unfair subsidies and overproduction. Looking at our chart, we see a clear strategic approach. Steel and aluminium hit hardest at 50% each. These are the backbone materials for construction, automotive, and defense. Compare this to copper at just 10% and zinc and nickel at only 5% each. The impact? Higher costs across industry, from construction to automakers. Since steel and aluminium are in everything, buildings to appliances, analysts expect this to ripple through the economy as inflationary pressure. This chart shows the dramatic journey of US tariffs on Chinese metals from 2018 to 2025. We started at 25% during the initial trade war in 2019 to 2020. Then saw a cooling off period through 2024 with tariffs remaining stable at lower levels. But notice that sharp spike at the end, that's 2025, where tariffs just doubled to 50% on steel and aluminium. We are not just returning to trade war levels, we are exceeding them significantly. This represents the most aggressive trade stance in this ongoing relationship with China. Since the implementation of the US tariffs, the S&P 500 had shed US $4 trillion from its peak earlier this year. As you can see, the chart shows a significant drop in the S&P 500 index price chart. This US $4 trillion loss represents one of the most significant market corrections directly attributable to trade policy decisions, highlighting how sensitive investors have become to tariff-related uncertainty. However, from a technical perspective, we can actually see that the S&P 500 remains bullish. It is still in a strong uptrend despite the significant drop due to the tariff imposed. We can also see that it almost hit the resistance line. Based on the chart, we expect that it will be pulled back and bounce again. However, due to the tariffs imposed and the announcement made by Donald Trump, the US market is full of uncertainty. Hence, investors should be ready for short-term volatility of the US market, monitor international ETFs, commodities, and currency movements. In addition, you can consider hedging import-heavy portfolios or shifting towards domestic-focused stocks. That's all for this episode of PhillipCapital's Market Watch. Remember to like, share, and subscribe, and follow us on our social media platforms. Thank you so much and see you next time.